Warriors, hello traders. We have an excellent guest today. I was just talking to Alexander Kaprivica off camera, and we know a trader in common. And he's live from Serbia, and I just want to show you what he does. He has a macro report out that you guys are most likely going to want to check out. So let me just grab it here.
Yeah, I'm
Here
I'm
we are.
doing a macro report and big swing, so there is a
Uh,
two separate things in the same kind of service. So hello to everybody.
Yeah,
Good.
great to have you, Alex.
Thank you,
Uh,
Dale. Thank you.
I mean, we're having just historic market moves, but before we get to that, it's always interesting for my viewers to understand the journey that traders take. A lot of people think they could read a book over the weekend and start trading, and that would be like reading a book on brain surgery and then
Uh,
going into the operating room. So, tell us. I think I caught that you got involved in the financial markets when you were still a teenager.
yeah, I start reading Financial Times where I was like 14, 15. I was always like interested in markets, and then we had a little bit of a volatile thing in Serbia. I was
Yeah.
also in 90s. I was also studying finance in France, finished my BBA in Paris, and then I came back, and then I started to on a journey of a trading, which is the last 25, almost 30 years.
So, did
So
you leave the country during the conflict?
I partially lived the country for 5 years. Then I came back.
Yeah.
I went through bombing in 2000, 1999, and then things calmed down, and I started working regularly in a couple of brokerage houses. Then I worked for a large international bank on a currency trading desk
Nice
for
background.
almost 10 years in treasury, involved in a currency trading. And then I was involved around 2007, just before the big crash in the Elliott wave teams. And from that time, I'm pretty much using that as my base methodology. And as you know, I already told you, I know Grega very well. We worked also together and we're good
Okay.
buddies. And I also worked with a couple of guys in the Elliott wave industry, which are, I would say, top 10 in that methodology in the world. One of them was my mentor. And then, as you know, you start a trading journey by burning of 10 to 15 accounts, bring yourself to zero until you find out how to manage risk and all of these perks.
It's a game of inches, isn't it?
What?
It's a game of inches,
Yeah,
just like
yeah,
sports.
yeah,
It's
yeah,
a very fine degree between success and failure,
yeah,
and reacting and having a good plan. So you bring up Elliott Wave, Alex. There are so many Elliotticians out
yeah.
there.
Nowadays,
What separates you and your mentor from the mass majority of Elliotticians with their multiple
well,
alternate counts?
yeah, well, where I started Elliott Wave methodology to study it, basically it was still a very kind of a non-accepted esoteric thing. So it was almost 20 years ago. So as things progressed and it went a little bit more into I will say retail space, and with the social media, lots of people kind of allowed themselves to put anything outside. I think Elliot is basically a very complex methodology, and what distinct people are experience and very small details. And also you need to be very fluid and thinking about probabilities, because patterns can morph, so you
Right.
need to be prepared in advance. If you know the book of patterns, which is basically just a market psychology, Elliott wave is a trending follow methodology. But what you read through charts, what we read through charts, it's basically the places where the investor psychology changes. So we
Right.
don't read these markets, as you know. We are just traders. The markets are led by big institutions, governments in fixed income. So we are like a small fish, and we want to stay with the big guys where they're going, and that's what I like about the
So
Elliott.
do you follow when you talk about big guys, what do you
Yeah,
use for you to know a COT information? How do you know where the big money flow is going?
yeah. I trained myself to encompass that into a Elliott wave, and also I use I started incorporating a couple of years ago. I liked always a macro, so I think for big guys, macro environment kind of gives a big circumstances where they want to be long or short. You can also look through technicals like 50 MA on weekly, daily, 200 MA, the usual stuff, support resistance, that's kind of a shorter term. But what I think it's most important for people out there, it's to know what they want to do. Daily trading is a very futile, very difficult task to get to. I was trading daily for my bank over 10 years. And I
Yeah.
was very psychologically exhausted by this everyday trading relatively big money on 1 minute, 5 minute charts. And I find out that that's a very difficult task to do. So I'm more like in a
Yeah.
swing basis.
It's a young man's game.
Yeah, young man's game.
Yeah,
Yeah,
I mean, just like, being on the floor in the pit, you're trading the edge, you're trading the paper, and there are guys that were 30 years old that looked 50 in the pit.
exactly.
And so if you want to have longevity, like Jack Schwager says, you have to find a trading style that suits your personality.
Exactly.
That's what Jack said to me was his most important advice.
And I think it goes also with maturity, as you said. More you are grown up, more you see markets as a risk probability. Where do you want to enter? Where is your stop to get that longevity in the markets? You're kind of a more oriented towards longevity into this affair rather than burning, quickly and play this game, which most of people doesn't understand. This is a very dangerous game in where you're a very small fish, which is actually like we see it a couple of days ago in crypto
I was
space.
going to bring that up. That's the elephant in the room. What did you make of that crash? Now, I was looking for 100K Bitcoin, and I still am, but I
Almost,
didn't expect it to happen like that.
yeah. Lots of shady things there. I know people likes conspiracy theories, stuff like that, but on the end, nothing will be done, whatever it is. In my opinion,
Yeah,
leverage is also some of the things we need to consider. People lever too much on their crypto position, trying to be rich very quickly. Some of the very rich guys also lost everything by being leveraged one or two times in
yeah.
this crash. So, to the point, if you are not aware that markets are run by the much bigger things above you, you're going to always be exposed to either over lever or not to be careful enough. So I'm very risk averse. I'm very conservative, try to manage my risk the best I can. And I think the risk management is one of the most of the things people hate because they view markets as a gambling house. It's
Right.
not.
There's a story floating around that President Trump's son, Barron,
I know.
Was short crypto. Do you think he's an Elliottician, or he might have some input, outside input?
Well, I don't think he's an Elliottician for sure.
I was being facetious.
No, I
Do you
know,
think?
but I
But
mean,
huh?
this you can never prove. But I mean, we all know
Right.
there is insider trading. I mean, it's just the nature of things. But overall, markets and human psychology is a really universal theme and so interesting, and that's why we are so glued to our screens. When you look at it from a side, who will stay with screens 20 years? I mean, it's a bit crazy, when you look
Yeah.
at it.
All
But
right.
kind of, it's very psychologically demanding, and I think it's the toughest game in the world because you have to go through immense ups and downs. Like for example, when you train jiu-jitsu as well, which is a very tough sport. When you come there as a white belt, everybody, just crashes you down for a 1 or 2 year. You need to sustain that through psychological hardship
Yeah.
until you learn things and prepare to defend and teaches you about the life. I think markets are pretty much the same. If you can sustain and learn, you can make a living of this, in my opinion.
Okay. So people look for the secret in
Oh, there,
trading.
there is no secret sauce. I don't think,
There
you
is
know.
a secret. The secret is there is no secret. Like you're
Yeah.
saying,
So
it's hard work and living through adversity.
I agree with you 100%. And even if you look some big traders in their era, you also can debate like in the other sports and something. That era was a really steep bull market, like in 80s and 60s. You remember this guy Coyote, which was, just running longs and making immense power. So nowadays markets are changed. There is technology. There is always changes. There is algos. There is all sorts of new stuff. Soon, probably market analysts will be pushed out by AI. Who knows? We don't know what's coming. But overall, I think it's a hard work, and it is very hard work in my opinion.
Okay, so let's get to what the hard work is about,
Yeah.
and maybe wherever you want to start, Alex, wherever you want to go, I can go there.
Okay, so I prepared a little bit of kind of a couple of main subjects. This is my list for you, so I will try to go, and I will start with the Nasdaq. I usually like to look futures. So, of course, we know the move down, which was caused by tariff Trumps, and then market moves on the upside. Uh, I would rather use this pretty nice trend line from where we touched it, and it was so interesting sometimes how technicals can actually
Yeah,
be really in line with fundamentals. So if we go on a smaller time frame, for example, in 15 minutes. So this is the exact moment here when we touch this line almost
yeah,
where the Trump announces tariffs.
right.
So looking all of this picture with this, also RSI, if you look, sometimes I like to start with these basic technical fundamentals. So you see, it was kind of a screaming for a potential push down. So I knew markets are a little bit overbought and we will get to the something. But you know what is usual, even from the Elliott wave perspective, if you count this as a 1-2, some type of a wave 3, it is very unusual that this is all of a correction. You know,
Yeah, anyone who bought the clothes on Friday, I want to give them money because there was no way I knew it was right to buy the clothes on
and
Friday or to buy the S&Ps with 150 handle gap higher opening.
exactly. But it is still not over because here we are still within, so
Yeah.
I think in a day or two,
ABC here, Alex. What do you
yeah,
think?
potentially. I never kind of jump to the conclusion. I always wait for some confirmation. So if that is the case, this can start moving lower if we don't touch the new high. Even if we do, in my opinion, we're gonna test this line again on the
All
upside
right.
a little bit higher. So I
One more
think
time.
yeah, if not now, maybe in a couple of weeks we might get some type of a pullback which will test some of these support levels. So when you take to the basic technicals, there is clearly very visible where is the support levels on the S&P and Nasdaq. And in my opinion, corrections don't usually finish here. If we are in a correction, it will be more downside, and that will be decided in a day or two. If we're gonna get higher, I think correction will start in a couple of weeks, and then we will test some of these levels here, from where we will test this again or maybe break it on the upside.
Yeah.
So
Okay. I want to ask you, how do you handle throwovers?
yeah, I mean, throwovers, I do handle them because simply if you overthrew by a margin and then you come back
Okay.
daily close,
You wait
then
for
it's,
a re-entry into
yeah, yeah,
the
exactly,
return line or speed
exactly,
line.
exactly.
Okay.
It's a very suspicious.
You've been watching my videos, Alex.
Yes, of course.
Uh,
But if we move further on the upside and then this line becomes support,
right.
then most likely we're going to continue higher. So overall, looking the higher time frame, I don't like to, if you look the S&P from its inception, it's 1957, but what is interesting, I found this, and we say it's a volatile time. This is the kind of a first stocks in
What's
19.
this? Tulips?
No, no, no. This is in 14th
Yeah.
century. This is like
Wow.
first stocks in
Oh,
Genoa
the
in
the
Italy.
Habsburgs. All right.
Yeah.
All right.
So, I mean, when you look this chart, there is here, if you study it, there is wars, bankruptcies, I mean,
Yeah.
all sorts of volatile things. We think we live in a volatile time. If you read this, it's amazing because every second line, it's a kind of a war or it's a bankruptcy. So it was always volatile. It was always
Yeah.
volatile. So I think what we
What a
see
cool
nowadays.
chart. Cool chart.
Yeah, so this is the monthly on the S&P. We count this. S&P was starting in 1957, but this is kind of a combined chart. And I don't like to play with these higher time frames. Everybody calls highs and lows, and we're gonna crash like it's gonna be the end of the world. But Dale, in nowadays world with this debt situation and all of this, tell me who knows when the debt bubble is going to pop? Nobody knows that. I mean, people trying to guess that for the last 20 years.
Some people know that. We don't know that.
Yeah, some insiders up there potentially know what's going on, but we don't know that. So that's the point. It's no point of guessing. That will be visible. You can always wait for a confirmation.
Yeah, they have to wait till they have all their assets outside of the financial system before the Great Taking. You ever read that book or hear about the book, The Great Taking?
No, no, I didn't.
Anyway, the stocks you think you own, the money you think is yours,
Yeah,
it's not.
yeah, I know the story.
So
So
if there's an emergency, it's gone.
there is an emergency, it's gone. That's true. It's gonna
Yeah,
confiscate everything.
yeah, yeah.
So what I'm gonna switch from indices to gold, which is kind of a subject. I think gold is in the wave three on the upside, very big RSI reading. So we are still in a bull market. I think we're gonna stay in a bull market. I'm looking towards 556,000 in this wave five. So pattern is relatively clear. So what is good with the Elliott wave methodology is that you can know the characters of the certain development. So when you see the verticality of this move on the upside, it suggests it's
Parabolic.
a wave three.
Yeah.
Because usually wave threes, wherever you look at them, they're vertical on the upside. They're kind of just going higher. So I think we are in this third wave, going up to, let's say, 5K with a little bit of a corrective. Always corrections will come.
So are you looking for a correction from here? Because I think the gold silver
Yes,
ratio
yes, yes, yes,
bottomed, and I
yes.
think silver's going to underperform gold for a little while during this
Yes,
correction.
because if you look silver cross gold, so this is the cross silver gold. We are five waves down, so some type of a pullback
Yeah.
probably we'll see.
Okay.
And that is going in line with your what you're saying. But you know what is amazing, Dave? It is amazing when you see gold over
Yeah.
Japanese yen.
Yeah.
So look at this chart. It seems like it is it's not even a halfway. This is a monthly chart. So you have a wave one and two, and verticality is just starting. So this is the gold over Japanese yen. If you look
Wow.
gold over euro, it's pretty much the same situation.
Yeah. Yeah.
You see. So
Let me ask you before you go to other ratios, and
yeah,
are you watching historically? I believe that the gold oil ratio right now is near historic low levels. Are
yeah.
you paying attention to that at all?
Yes, I have the oil chart, which goes very long back, which is also very interesting. So this is from like 100 and 1986.
Wow, you are macro, man. You're
Yeah,
like
I am. Because
you're
I
the
think
most macro I've talked to in
you,
quite
you,
a
you know,
while.
you know why? Because macro gives you an interest rates, fixed income markets gives you an environment for the other assets to go up and down. So that's
Yes.
why I think macro is so important. I
Yeah.
don't think anybody, especially in the world with this debt cycle, can allow the energy to grow higher. And I think United States influence currently in the world, which is growing, it's going to suppress oil price as much as they can, either with cooperation with OPEC or drill, baby, drill. So nobody wants to have inflation in this environment. So that's why I think oil is susceptible to move further lower. But if you look this monthly chart and RSI, it's going to take some time this to come to this line, and then we will see. But you see, we are in some type of a sideways consolidation. At one point, potentially, if oil starts to be obsolete in let's say 10, 20 years because it's a macro theme. But short term, next 1 or 2, 3 years, I think oil will continue to go a little bit more lower because nobody can allow the inflation in this debt cycle, in my opinion. So that will be devastating for every economy because the GDP cannot produce such output to actually pay the interest they already have. So
So we're going to hyperinflate out of this.
yeah, something like that. Yeah, and the
Okay.
gold, one of the reason gold maybe it's still kind of has a couple of legs to move on the upside.
So you don't think that we could have a deflationary move first and then the Fed really breaks out the bazookas?
Fed stopped yesterday QE, which was very interesting, but people already started to say, "Oh, we're gonna go to stop QT. We are gonna go to QE immediately." No, I think that you need to know first what is the QE and QT. It doesn't go out of the banking system. There is a repo. There is a lot of stuff
Yeah.
going on there. But
Yeah.
what I will say, it is pretty much, I think, adjustable thing because they see some things and they want to kind of slow or stop QT because there might be some bumps in the road ahead. So they want to stop draining this liquidity because of that. That's my opinion. That
Okay.
bump in the future can grow to be larger and they start the QE again. But for now, I don't think they're going to do QE very soon. That's my
Okay.
personal opinion.
All
Yeah.
right. Speaking of bumps in the road, before the Trump trigger on Friday, credit spreads were widening out.
Yeah.
And
Yeah.
last year, everyone wanted junk bonds, but we had those two bankruptcies. And if you look at HYG and then you look at TLT, they look like they're not even related anymore.
Yeah. TLT is very slow. I track it. TLT is really like a slow train now, as you can see. So we clearly see a 5 waves down here, and I think we are about to see some type of a pullback towards 109.
Okay, so if you just go shorter term on both the TLT and then the HYG, you'll see that they're moving in opposite
Yeah,
directions,
which is
which is
crazy.
why the
Yeah,
credit spreads were widening
yeah.
before this, and they really haven't come in that much since last week.
But
Do you think there's a credit problem or some type
you
of banking issue that the
we did have this situation 16, 19, we did have situation. We also had a recent couple of 2 years ago with this bankruptcy of
oh,
couple of banks in US.
yeah,
But I don't see it, as a major problem. And even if it is, this current administration is so adamant what they are doing, they will just put the stitches on it until they try to move their thing towards the next couple of years. I don't think this administration will allow that you have such a systemic risks and some meltdown and some crash on their watch. I don't think that will be the case.
okay.
So
So Alex,
let's
we have about 5 minutes left.
yeah, let's quickly move to Bitcoin. So so cryptos, I track cryptos very much. So except from the Elliott wave count, one of the things you can look monthly RSI, which is looking very nicely here. You see how,
Diverging. Yeah.
yeah. So this is the RSI goes up and down. So you can match these highs with the lows and lows. So this is the RSI on monthly. So I don't think we are done in crypto. I think we have a little bit more on the upside. There, 150 to 170, in my opinion, maybe higher. With cryptos, you never know. But what is interesting also, it's Bitcoin dominance, which starts to move a little bit lower. And some of these altcoins looks a little bit like a pullback. And then if they starts to move higher, we might get this so-called alt season for a couple of months.
Well, sure, because everyone's gone now.
Yeah, yeah, exactly.
I mean, they cleaned everyone out,
They
and
cleaned everyone up.
even if they have money left, they're afraid now.
Yeah. I want to also talk about the dollar index, which I know
Yeah.
is one of your
I,
favorite subjects.
how do
So,
you are a mind reader besides an Elliotician?
yeah,
You read
no,
my
but
mind.
I just know you're so much into it. I looked lots of your. I mean, you have a daily show with guys,
Yeah,
which they all look lots of currencies and stuff that are going
yeah,
on. And I know you are a favor of a Dixie, as you are calling it. So, I mean, clearly from the Elliott wave perspective, you have five waves up and a pullback. So, whatever you have, a pullback provides a support at the equality. So ABC.
yeah. Right.
What is the point? I don't think that the dollar will from here surge higher. What I see most likely we will have something what we call a complex correction, which I
Okay.
think on the end in a next year or two will test 89 and then potentially reverse. If we go below the support 89 in a year or two, that will be a pretty downward trajectory for dollar, but I don't think that will happen. I most likely think that people will be surprised. So dollar is most likely related with rates, and rates are not looking good. They are looking to go downside
Yeah,
in
right.
the next couple of. So I'm still looking from fundamental perspective. What should cause maybe stock market moving lower will cause dollar to go a little bit higher in this X wave. So I do think if you also put a simple channel, these are really simple things. When you put this simple channel, as long as we are trading with this kind of a circle range up and down, that will be a corrective nature. If we
Yeah.
see a great momentum,
Do you have anything at 102?
yes, yes,
Okay, because that's been my
yeah,
target. So
yeah.
okay.
Because if you get here and put this line here, it comes around 102.05
Okay.
as a resistance level. So if we
Right.
pass that, even if we pass that, I don't think dollar will go to a new high because dollar higher nobody needs. You
Yeah.
know, euro dollar markets, you lend in dollars,
Yeah.
70% of the debt is denominated in
That
dollars.
that would be your deflationary
Yeah,
crash if
yeah.
that happened.
US doesn't need a strong dollar now. So I just think it will be just a pullback and then we might start to go lower towards this 80, 90, 89, 90. And then it will be the do or die thing. So I don't think dollar will break this level, but if it does, we're going to continue and test next support. It's really
None.
a simple kind of technicals. If you include a little bit of all technicals and Elliott wave, you have the probabilities. So what I do when I have a hypothesis on, as you say, as an alternative count, I want to firm evidence that something which I'm because you need to have a solid hypothesis what's going on in macro and what's going on in your charts, and then you seek for this hypothesis to confirm. Only
Yeah.
then you can say something of this is probable to happen. I see too many. I mean, you have to be flexible because markets are flexible and they go out everywhere. So if you are a firm believer in one scenario to a degree while it's not confirmed, that's usually you're going to end up on a losing side. That's kind of what I learned over these 20 years. So I'm pretty much flexible because people usually stick to firm scenarios like it has to be there. You don't give us nothing firm. I said, how can you know anything in advance? I mean, people try to forecast these markets for last, century and nobody did it. So nobody did it in history except maybe Gann or Jesse Livermore to a degree. So two guys in a whole. When you look, Druckenmiller, he say, I can change my mind in an instance.
Yeah.
And reverse positions. So don't look for finished scenarios. Look for probabilities, confirmations, support, resistance, whatever you do in technicals. Try to be liquid and fluid, not firm, because markets changes.
Yep.
Anything can happen.
They're like a woman, huh, buddy? Ever hear of ever
That's a,
hear of
that's a, you know, you need to call me on that subject. That's a different subject.
okay, ever hear of a guy named Nostra Pinkert?
No.
Okay, well, you ought to check the guy out. Anyway, I like your work, Alexander.
Thanks,
I
Dave.
could tell I would want to look at this and keep in touch with what your counts
Sure,
are and what you're
sure.
saying. So the best way for people to sign up with you or consider it and follow you.
Yeah, I now lead two services. That's a macro updates. It's a very relatively affordable, like $30 a monthly service where I 2 times a week I go over the main macro themes like dollar, oil, gold, rates, and all of that which influences. I also look indices in different part of the world. Try to create kind of a picture, and I also have a big swing stock when I do a swing trading in stock markets, mainly US stocks. So that's another subject. There is a rare earth craze. So there is,
Yeah.
I also have 20, 30 stocks in that.
They were a band. Google it, Rare Earth.
Yeah,
You might like their music. Anyway, I just thought of that. Rare Earth in Demand. That was from the 70s.
yeah,
So, you know what happens after you survive an interview with me interrupting you for 30 minutes?
no.
You're now my new trading warrior brother, Alex.
Okay, so it was in initiation.
Yeah, you got through it like a champ, and
Yeah,
I, thank Pete for
sure,
introducing us, and I'll say hello to Gregor for you, and really was a
sure, for sure,
pleasure,
for
and
sure. He
really,
was a great guy.
I I could tell in 5 minutes if somebody knows, and you know, your years of going through this journey, uh, it's like wine. We only get better.
Yeah, to the degree this is all 20 years is just learning how to be flexible, not to stick to anything, and how to count probabilities and manage risk. So 20 years journey, somebody can say it's worth it. I think it's worth it because you get to know life through it.
You
But
get to know yourself through it.
exactly, exactly. When I remember
Okay.
myself starting, how crazy I was and how I was looking markets, buying, selling, trading on 1 minute chart. I don't know how many accounts I burned.
Yeah.
I think more than like 25, 30 accounts. So if everybody tells you I'm successful from beginning, he's lying for sure.
Definitely. Because for me, Alex, it's about 50 years.
Oh
So,
my God.
and you know what? I'm just starting to get the hang of it.
Well, I, I'm 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 starting to getting there with you, so
All right.
we can chat about getting it.
Anyway, trying to figure out
Yeah,
the Disneyland jigsaw puzzle isn't
yeah, jigsaw
easy,
puzzle, exactly. Jigsaw
but
puzzle, exactly.
they call golf the greatest game.
Yeah,
I
I
call
play
I
golf.
call I call trading the greatest game.
Yeah, golf is also very tough. So
I
I think
couldn't,
yeah,
yeah, I
lots of
gave
skill.
up golf. It was
Wow.
because it was more aggravating than trading. I couldn't do both, bro.
That I agree. It's
So,
agree. It's a
uh,
hell on your mind and
yeah,
on your body. But sometimes I just walk. I go to play golf, kick a couple of balls. That's not the day for me. So I make a nice walk.
yeah, stress management.
Yeah, like a bad trade. Just go out
Yeah,
and have a have a
I
nice rest of the day.
I'm very happy that we had a chance to talk, and
Sure, sure. Always,
I
Dave.
hope
Always.
you'll want to. I hope you'll want to do it again down the
Sure,
road.
Dave. I'm at your disposal wherever you like. You have my DMs. Just call me. We can chat about getting there to know the markets.
Okay, so at the minimum, follow Alex at Alex spelled Alex instead of formally Caprivica, and
Yeah.
go to his websites, check him out. He's a
Thank you,
pro.
Dale, very much.
You're a pro, bro.
Thank you.
Nice
All the
meeting
best.
you.
All the best.
Adios.